and this is where we begin one of the worst trading weeks in 2025 and in stock market history in a very, very long time. I believe this week we can see a decline on the Dow Jones Industrial Average of potentially 10%, potentially 10%. If things go really, really bad. Alright, so my name's Take Note. Welcome back to my channel. In this video, I'm going to be presenting you guys the reasons why I believe that the stock market is about to have another crash, potentially retesting the lows after sweeping liquidities resting at this level, and potentially this level as well. So over the next few weeks, I believe we could have another stock market crash, and the reasons for this I'll outline in this video. So make sure you stick around to the end so that you'll be able to understand my thought process. I left a clip for you guys to see on my prior crash call, which occurred on the 31st of March as we approached Liberation Day, and I called that to the T and actually profited from it. So if you want to see more calls like that, definitely hit the subscribe button so you get better analysis, better calls, and you'd have an understanding of how I'm trading as a funded trader. Alright, so if we analyze what's going on with the markets at this current moment in time, what happened was, as the year began, we rallied higher into this level, which was a fair value gap at the high of the range where we saw price sell off aggressively. Then we had a rally in March, which was sold off further into Liberation Day, where we crashed on Liberation Day following the tariff announcements by Donald Trump. Since then, we've had a massive rally higher, right into our level of liquidity. And our level of liquidity is resting right here. We had liquidity here that got swept. We had liquidity here that got swept as well. So now, at this current moment in time, we've also seen what I'd like to call a market structure shift, which is when price stops making higher highs and higher lows, which we see as we approach the liquidity. We then had a market structure shift here, where we made a lower low, which was below this low here, and we've pulled back to make another low on the day after that. And I'm going to make this red just so it's a bit clearer for you guys. All right, so this market structure shift is a sell model in the trading system that I trade, and this trading system has made me quite a lot of money over the past couple of months. If you're unaware, definitely take a look at the channel. But just really quickly, I'm going to show you how much I've made while I'm building this 100k up to $1 million worth of funding. So I've had one account purchase, challenge free cost. I've got my refund, and in that process, I've had $11,200 worth of payouts. I'm also currently awaiting another payout, which I should be receiving later on this week. I should be receiving tomorrow, which is going to be another 3.5%, and I should get that later on today or maybe even tomorrow. So as you can see, I am definitely profitable. I am making money from trading. So you should take my analysis with, you should value my analysis as I am currently trading this. That being said, if you take a look at the chart, we've swept liquidity at the high. We've had our market structure shift. So now where can we expect price to go to? The first place we could expect price to go to would have been to fill this gap, which we managed to do on Friday. However, although we filled the gap, we can expect price to rebound at the gap. However, if this gap is breached, we can expect price to target further levels of liquidity. And from my belief and my understanding and my experience in the markets, although this is an opportunity to buy, it is not ideal to get aggressive long into the market while price is printing lower lows and lower highs. So for this reason, I'm expecting price to continue trending lower in an attempt to sweep liquidity at lower levels. As we can see right here, we have liquidity. We also have liquidity resting here, as well as liquidity resting at the lows as well. So all of these low levels are going to be targets for the market in the coming weeks. There is a chance that we just sweep liquidity here and then we continue higher in a more aggressive fashion. However, my reasoning for having price come down much lower than expected and target lower levels of liquidity is for a few reasons, and I'll make you guys aware of that really quickly. Okay, so I had a quick conversation with ChatGPT just to support my reasoning for why the market could retest the lows. So I asked ChatGPT to describe each month of the year in the stock market based on seasonality, and seasonality is extremely important in regards to sentiment in the markets. Markets tend to trade seasonally, and particular months have more bullish momentum, as in the same way particular months have more bearish momentum. So for example, January tends to be a more bullish month. The reason is because investors are re-entering the markets after their tax loss harvesting in December, and December tends to be more bullish month, where we have what we call a Santa Claus rally, where the year finishes strong and there's bullish momentum into the end of the year. The reason I believe that we could see a retest of the lows is because June tends to be a slower month of the year. Typically one of the weaker months, as mentioned by ChatGPT. There's fewer catalysts. It's approaching summer, so a lot of investors tend to want to reduce their risk to the markets, and sometimes the market tends to trade in a range. So if we was to see that in the month of June, what that would look like would be price would, in essence, potentially target the lows of the range and then potentially bounce higher into the range. And that could look like price was trading from this high here down to this low here, back up to this high here, down into this low year, until we get into further months in the year where we have more bullish momentum and we have some more catalysts to push the market higher. So I have two reasons at the moment for why I'm expecting price to go lower. As I mentioned, we swept liquidity, two levels of liquidity here and here. We had our market structure shift right here, which is the sell side model that supports price moving lower, as well as having our seasonality telling us that summer month of June tends to be a weaker part of the year, a weaker month in the year. So this catalyst is most likely going to support lower prices entering into June, as we are approaching the end of May at this current moment in time. That's why I'm not necessarily screaming for a crash into next week. However, that is possible. Just so this green candle turns red. However, that's not my ideal case. We could have a crash. We couldn't have a crash. There's a potential we don't crash. When I say crash, all I mean is that the market sells down aggressively. That's a possibility, but it's not a guarantee, or it's not the most likely outcome, because crashes are extremely rare. But that being said, going into June, we are probably going to see a lot more selling pressure as we approach one of the weaker months into the year. So this is why I have somewhat of a bearish stance at the moment, because as we can see, price action is setting up to decline further, as well as seasonality is pointing us in the direction of bearish momentum into the month of June. So that's my analysis for this moment in time. That being said, once we do have our decline, once we have swept our levels of liquidity, once we have swept all of these early buyers out of the market, and what I like to call these early buyers is weak hands, once these guys are taken out of the market, I do expect to see price rally much higher from this position, into all-time highs, as we clear the way for more certainty in the markets, and as we see a resolution on tariffs in the coming weeks and in the coming months. So yeah, that's my analysis for the US 30 chart. I hope you found value in this video, and if you did, definitely hit the subscribe button. I'll see you in the next video.